Hello, everyone. Thank you very much for joining us today for today's webinar. I think looking at our participants that the majority of you have seen me and my face many times already this summer. But for those of you who might not have, my name is Rachel Lieblein-Gerbala, and I'm the Program Manager at the Spencer Educational Foundation. And I'm so excited to welcome today Dane Lopes and Tim Bunt from Everest Re Group for their presentation, Understanding the Carrier Value Proposition. And just a quick note, Dane and Tim, like many of our other presenters in the past, are very much open to question and answer at the end of their presentation. So if you have questions throughout, please put those questions in the chat and they will address those at the end. And now to introduce Dane and Tim more formally, I have the pleasure of introducing Mariah Propus. Mariah is the Senior Vice President and Director of Distribution and Broker Partnerships at All Risks Limited, and she is the incredible chairperson of the Spencer Educational Foundation's Board of Directors. So Mariah, the floor is yours. Thank you.
Okay. All right. Thank you so much, Rachel. So hi, everybody. I think this is great that this is actually our second webinar and my second opportunity this week to spend a bit of time with you. I talked earlier this week, so far in the series for our summer webinars, we were really focused on the risk management function. And we'd heard exclusively from risk managers at a variety of different companies, and they took on many different dimensions to the risk management and the enterprise risk management function. And so this next batch of webinars I'm quite excited about as well. This is where we focus on carriers and carrier partners and carrier capabilities. You heard earlier this week about the structure of a specialty insurance company that is focused mainly on the US as a geography and had a variety of different specialty insurance operations. Why I'm really excited about our conversation today is I think it plays that conversation forward into the broader understanding of a carrier's value proposition. From my own perspective, I have been so fortunate and been privileged to work with Everest Insurance for the past couple of years closely as a wholesale broker. In my mind, they are one of the carriers really setting the standard for creation and evolution of a value proposition. And the way they deliver that, not only through their distribution channels, but ultimately to their clients. Clients just like the ones where all of you are spending your summers interning today. I'm also really pleased to have both Dane Lopes and Tim Bunt with us today in their respective capacities. And I'll tell you just a little bit about both of their backgrounds because, as I've mentioned before, I do think it's important to understand, breadth of professional experience and also what they're bringing to the table for us. So Dane, I've been fortunate to work closely with for the past couple of years. Everest has Everest Re and Everest Insurance. As a member of the Everest Re Group, Dane's title is Chief Commercial Officer, as well as Group Head of Marketing and Communications. And when I think about Dane and what he's been able to do for our own firm, his leadership in the marketing and distribution and delivery of products both to clients and through distribution channels, is critically important. And he is a part of the executive team, certainly a very well-known, successful, energetic, engaged professional in our community. Had prior experience at Swiss Re before he joined Everest, and really is someone to me that is just, an A player and one of the first people you think of when you need someone very prominent in the industry to come forth and really present what value proposition means and how it can resonate with clients and with brokers. So part of Dane's team, also joining us today, is Tim Bunt. Also great for us to have Tim with us. Tim is a former Spencer board member, so we love Tim's prior experience with Spencer firsthand as a board member. I should have also mentioned Everest, by the way, is also obviously a terrific partner of ours. Tim's role, and Tim, I heard you saying, I can't believe you're almost 2 years with Everest. He oversees what Everest calls their key account management program. That's a large account focus. So again, types of accounts very similar to where all of you are interning this summer. And he's responsible for driving what they call the One Everest strategy. And I know we touched on this earlier this week. One of the things that you'll see from insurance carriers that have a broad range of capabilities is you'll have clients or brokers that only work with one piece or one part of what it is they bring to the table. Everest has adopted a very formal approach, their One Everest strategy, where they're thinking holistically about their solution set and how they deliver all of their solutions in a very seamless manner with the value proposition in a way that resonates with clients. So Tim is also the practice leader for real estate and hospitality, two very interesting industry segments today. And he does lead several of their large retail insurance brokerage relationships as well. And Tim's background, like Dane's, is also really impressive. He spent a lot of time on the risk management side of the business, but also has some experience on the carrier side in the energy space. He has a lot of expertise in the Bermuda and London marketplaces as well. So with that, let me just really thank Dane and Tim for making some time for us today. Guys, you have a good group here. They will ask lots of questions. We really appreciate the support and the partnership from Everest and certainly from both of you as well. So thank you again.
Thanks, Rachel, and thanks, Mariah. Appreciate you guys having us, and thanks everybody for giving us some time to spend with you amidst this global pandemic. And if you're anything like my oldest daughter, who I drop off at college on Monday, you're either heading back to school now or getting ready to if you're continuing your education. So I wish you nothing but the best moving forward for a very smooth and COVID-free experience. Hopefully you get to go back to campus. I know that varies by college. Tim and I are both normally based out of our Stamford, Connecticut office. You can see Tim's in the office today. I'm working from my home still, but we appreciate you having us. When Mariah asked me to participate in this webinar, certainly Tim was somebody that jumped right out, is somebody that would be an excellent co-presenter, former Spencer board member, former chief risk officer of CBRE, so he can bring a lot of real life experience and perspective from both the risk manager and the carrier perspective. Before we get going, I don't want to assume that you folks all know anything at all about Everest, so I thought I'd give a little high level overview of what Everest is, and then we'd really get into the carrier value proposition and our client engagement strategy. Everest is a large global insurance and reinsurance company. We're headquartered in Bermuda, with our US headquarters currently in Liberty Corner, New Jersey. We're actually building a new headquarters building in Warren, New Jersey that will open in early 2021. We are a top 10 global reinsurer, and we are the fastest growing specialty P&C insurer globally with over 150 specialty products. As a company, we're 47 years old. We've been publicly traded on the New York Stock Exchange for the last 25 years under the ticker symbol RE, and we are a member of the S&P 500. Some of the things that when we try to talk about our value proposition, we certainly want to look at our competitive advantages. What are the strengths that we bring to the table? We think we bring a diversified business mix, a very experienced management and underwriting team, global reach, robust financial strength and strong financial ratings. AM Best, S&P, and Moody's all reaffirmed our ratings in the midst of the global pandemic. We have a strong balance sheet with industry-leading debt-to-equity ratio, very low expense ratio, and maybe most importantly of all that, a powerful culture, and that's where I thought I'd start. See if I can advance my slide. There we go. So at Everest, one of the first things we determined was that because we're I said we're 25 years in the insurance space. As a company, we've really reinvented ourselves in the last 5 to 6 years. And I was employee number 2 of the new Everest. And along with that, we said, let's redefine what we want to be. So I think when you talk about a value proposition, we need to know who we are first. And for us, it was identifying our culture. It's what I would call our secret sauce. There are a lot of very good companies out there with strong financial ratings that do exactly what we do, or at least similar. So how do you differentiate one company from another? For us, we think one of the early things that makes a huge difference is our company culture. So we identified the things that we thought were most important, with collaboration being one, open, transparent, and effective communication amongst colleagues, and then internally and externally as well. Thoughtful assumption of risk. At the end of the day, we're here to try to make an underwriting profit. So we want to be very thoughtful about how we use our capital and come up with creative and nimble solutions to help solve our clients' most challenging insurance problems. I came from GE early in my career, as did our new Chief Operating Officer, Mike Mulray, who's been here right along with me since I joined. And at GE, it was all about getting things done and executing. And we thought that was important. And when we were building our culture, we thought the ability to have a performance culture where we deliver upon our promises and we operate with a sense of urgency was really critical. We also wanted to be very, show a lot of humility, because at the end of the day, nobody owes us anything. We were a relatively new player in many of the lines that we've launched. We set up 13 new underwriting divisions in the last few years. And our trading partners and our insureds didn't owe us anything. We had to earn everything we got. And, it's a caring and respectful approach to serving our colleagues, our customers, and our community. And one of the things I always try to remind our team is, while we want to be humble, we don't want to be pushovers either. So we're fierce competitors. And then leadership. We all have to display leadership every day by what we do in backing up the talk with the walk. When I look at our marketing and distribution team, as Mariah mentioned, Tim's a part of my team. Our job is to enable our underwriters, to help them be more effective, more efficient, and more connected with their trading partners. Our job is to deliver the quotable opportunities that we want to write, and then utilize our relationships and influence both with the client executives, with the placement folks at the brokers, and then obviously if we have the relationship with the insured, to help influence and help win a disproportionate share of the business. We would like to win more than our adversaries. All along the goals of building a world-class distribution platform that will strengthen our brand and continue to support profitable top-line growth. We are growing rapidly, but our number one thing is not growth, it's profitability, and that we don't ever want to sacrifice that. And then if I look a little deeper at our team, we break down our objectives into 3 buckets. And I hear a lot of times in this space, I hear these words used interchangeably: sales, marketing, and distribution. And frankly, I think they are 3 distinct competencies, and we have to have areas of expertise and focus in all 3. Sales is about meeting our financial goals. It's originating risk. It's about leveraging our relationships to increase our conversion rates, to make sure, as I mentioned before, we win more than we lose. And then, as Mariah mentioned, and Tim will get into, it's driving that One Everest cross-selling strategy and our key account strategy. So marketing, the other piece of that, that's enhancing our brand value. So in addition to being the Chief Commercial Officer for our insurance business, I'm part of the Group Executive Committee for Everest, overseeing our group marketing and communications, both internal, external, dealing with shareholders and analysts and investors in the media. So for us, this is communication, messaging, social media, trying to create thought leadership pieces where we can position our experts as trusted industry advisors. A little bit of advertising. You don't see Everest advertised much, but we do a little. Marketing collateral, and then owning our internal and our external website. And then where the rubber meets the road really for us is the distribution piece. My focus on the distribution side is creating distribution resiliency. So we have what I would deem a multivariate distribution platform. And what that means is we will trade in the retail space with appointed brokers. We will trade in the wholesale space with appointed brokers. And then we also trade in the delegated authority space and program space. So it becomes very critical when you operate like we do to have very clear swim lines so that everybody knows how to access us, and also so that our valued wholesale trading partners know which retailers are appointed. And then we use them as a very efficient means for us of aggregating opportunity that would be inefficient for us to go after ourselves. So they have a lot of producers out there that are calling on the agents and brokers that we couldn't call on effectively. They aggregate that business, and they become a very, very, very critical component, potentially the fastest growing component of our distribution platform. So it's all about making sure we have relevance with our brokers. It's about measuring, managing, and driving performance via key performance indicators, so keeping score. It's about expanding and contracting our distribution platform. So where there's a new trading partner we should consider, we look at that. And we also are constantly rationalizing our platform to make sure we're giving appointments only to those that are putting our capacity to use. We have broker agreements in place, and we manage the broker compensation process. And then we utilize various technology and broker tools as a force multiplier. So I think this gives you a big high-level background on what we try to do from a distribution standpoint, from a marketing standpoint, from a sales standpoint, that sets the stage for Tim to kind of really get into our client engagement strategy. So I'm going to turn it over to Tim, and he'll take it from here. Tim, you just tell me when you need me to advance a slide.
Thank you, Dane. As mentioned earlier, most of my career I actually spent on the, I'll say the buyer or risk management side. And what I would say to you, probably the most important thing to me as a buyer was no surprises. And you'll hear that throughout the next few slides, in that as the relationship is between our broker partners, I'll say the client, the risk manager, maybe a treasurer, could be a CFO, and then at the end of the day, the insurance company is putting their capital at risk. So our commitment, as it says here on the slide, is basically to be timely, diligent, and really work towards mutual success with our trading partners. And again, it is truly a triumvirate of relationships that have to come together successfully in order to meet the end goal, which is basically no surprises. All right, and I mentioned now our approach is simple, using our culture. We strive for no surprises. So what does that mean? Well, basically what that means is you're getting out in front of things, you understand the industries that you're looking to underwrite. From an insurance company's perspective, you have a risk appetite that's well documented. And at the end of the day, you are working with your broker partners, as Dane said earlier, to make sure that you're getting submissions in the door that are actionable, right? Probably one thing I'll point out to people on the call is early on in my career, I didn't appreciate the difference between a company that was approved versus companies that are not. So many times what people don't understand in the industry is a market may not be open to a specific broker. And that's why when we talk about wholesalers, many times we use wholesalers. So there is this omni-channel, we have multiple ways that you can access our firm, and all in the goal of making sure that we're solving client issues and addressing their needs. The last thing I'll talk about is, from a communication standpoint, must be trust. All right, you're working towards mutual respect with your partners. And I'll share with you something that Dane told me when I first arrived. Always consider positive intent. And when I reflect on that, and I think about my own career, there's many times I wish I had heard that many, many more years ago in my career. Because everyone's busy. Everybody's moving very quickly. In fact, the industry is moving much quicker than it has in the past. So just keep in mind that sometimes we don't always get the answers we're looking for from an insurance company, or maybe the timing's not right, but realize that there's multiple people that are involved. There's technology that's being utilized. And ultimately what we're trying to do is solve the client's ultimate issue. Next slide, Dane. So here what we talk about is understanding the stakeholders and the client's risk appetite and risk financing strategy. I think this is something that really we need to spend more time on regarding both insurance companies and brokers. We tend to get caught in, this is the product that we have, this is the price, where really we need to step back and truly understand, well, what is that client's business? What are they trying to achieve through insurance? Do they have a risk appetite? Do you understand what their risk appetite is? And then develop products and services and tools to meet their needs. So here are just some of the ways that we do that at Everest today. First and foremost is off-cycle client and broker meetings. So throughout the year, not meeting with that client once a year, meeting with that client multiple times throughout the year. Another thing I try to do with my key accounts is I actually participate in their earnings calls, right? I try to understand what's happening in their business, what are some of the risks that they're trying to manage. And if you look at 10Ks, you look at proxy statements, you'll also see a section on risk factors. A good way to understand better how management and the board is considering risk. Stewardship meetings is another area that you can get a lot of intel, plus no surprises from the client's perspective and our broker partners if we're all sharing information and we're all working off the same end goal, which is to solve clients' issues. Thought leadership, here what we've done at Everest is with COVID, we had a whole web page tied to COVID where clients and broker partners could go online and look at the resources we had available, both in-house and outside the company. Online engagement, I hope everybody on this call is tied into our LinkedIn, and please do join our LinkedIn page. is a source of information. And that's another thing. Many times, risk managers are relying on the broker partners to bring information to them. Nothing stops a risk manager from going online and doing their own homework and truly understanding more about an insurance company that they're joining as partners, because it is a partnership. If you're a commodity, the way I look at it is two types of buyers out there. There are commodity buyers and there are partnership buyers. A partnership buyer is a long-term relationship, and many of the insurance companies value that type of relationship. I'm not going to go as far as saying that there's a different cost of capital tied to that, but I do believe that those risk managers that understand that value of a long-term relationship will definitely yield the benefits in the long run. The next thing is supporting industry and client events. Just like today, Dane and I are speaking to this group, but participating in RIMS and in other events that happen throughout the industry. I'll go even one step further, developing relationships. I'm an avid golfer, as many of you know, and at the end of the day, I've met so many people throughout my career, spending 5 hours on a golf course with them and getting to know them, right? And that's just one way of doing it. And I really encourage all the young professionals, build your network. That network throughout your career is going to come in handy, right? People move at different speeds throughout their career. And again, I've been in this business for 37 years. Always happy when someone who worked for me many years excels and goes beyond and leaves let's say my firm and goes somewhere else to take the top risk management job. And look at yourself as stewards of the industry. You're here representing the risk management industry, so give back to the industry. And I think that's very important to bring in young people and young talent who are coming to take the place of someone like me as I retire in years to come. The next thing is key account management program. Think of this as CRM, customer relationship management. How do we, as an insurance company, how do we make sure that those clients who, again, as I explained before, are not commodity buyers, but value the relationship and a long-term partnership, what are we doing for them? How can we help them solve their issues? So basically it's a give and take. While clearly our goal is to, expand our relationship and share of the wallet, as we refer to it, clearly the ultimate goal for us is also to build a sticky relationship with that client. And you do that through this one Everest strategy that we have, which is basically providing more products and services over time and making that client a satisfied client. What I'd say to you is at Everest, we're in the early stages of our key account management program. But collaboration is not something that happens to you. Collaboration is something that you need to do, right? You need to communicate with people. And a lot of people believe they just sit back, and that's not a winning strategy when it comes to key account management and client engagement. Next slide, Dane. So this is what to expect. I mean, at the end of the day, if you're doing all these things right, what I'd share with you is, it takes a village. I'd say that's the one Everest strategy, but you're meeting the client's expectations. There's no surprises. You have a long-term relationship with the client. They know our business. They know who are the people to go to in our organization. If you are a key account, you have a key account manager. That person can act as the quarterback. But in no way do we limit that engagement within Everest. We believe that the more the client knows who we are and the executive team and knows who to go to get deals done, that's what's more important. It's more important that client be satisfied with the products and services we're offering. And then last but not least, is I'd also say to you is that we're not always going to agree, right? Whether it's a broker partner coming in or a client that's looking to do business with us, it may not be our risk appetite. It may not be an industry that we're comfortable in deploying capital. But what we always will do at Everest, and it's one of the reasons I came to the firm, and most notably it was because of our culture, but this is another reason, because we just don't say no and leave it at no. We look to provide other options or alternatives that client can consider or our broker partners consider to solve that client's problems. And one fun fact I'll give you is I was actually at Prudential Financial, and for many of you on the phone, you probably don't know, but that's who Everest Re is. It's Prudential. And that was back in 1996 when the deal was spun out. And again, this company is a 48-year-old company, 25 years being publicly traded, and a lot of people don't know who we are in the marketplace. And so the role of our group is to make sure they know who Everest is, our broker partners know our risk appetite, but more importantly, when it comes to key account management and engagement, that those clients know where to go, know who to speak with, and know what our risk appetite is. And with that, I'd like to end and take any questions. Thank you, Dane.
Thanks, Tim. And we'll certainly entertain any questions that you guys have about Everest, about the client engagement strategy, about our value proposition, or really any topic for that matter.
Yeah, I have one question. This is Gilbert over here. What are some of the products that you provide? Or could you
Sure,
give an
Gilbert.
example?
Yeah, so we write everything from property insurance, primary casualty, so we'll write workers' comp, umbrella, excess, auto, GL, all kinds of professional liability. We write financial lines like D&O. We do trade credit and political risk, surety, fine art and specie, property and transit, so inland marine, builder's risk. So a pretty robust offering. There's a few areas we don't write today. We don't do ocean marine. We don't do aviation or satellite. And that was by design. We've looked at pretty much everything that we could do. And at the time when we made the evaluation, those weren't really attractive for us. Either there was established parties that already do that well, and the barriers to entry were hard, or the pricing that we saw in the marketplace wasn't adequate for us to enter. But we always evaluate that. We've launched new products in the last couple of years. We launched a cyber offering. We stayed on the sidelines for cyber for many years. We didn't dip our big toe in until a couple of years ago. Transportation, for us, that was an area where there was a need in the marketplace, and we decided to entertain transportation. Life sciences is a product we launched a few years ago. We do environmental. So pretty robust offering. There's very few lines of insurance out there that we don't write.
Hey, Gilbert, I'll add to that. So the other thing that we do, which I think is great for our broker partners as well as our clients and prospects, is we have a document called the flip book. And the flip book is a great way for someone to get very well acclimated with what our risk appetite is by product line, what our products and services are. I'll give you an example. We have a service called Zero, and think of Zero as if you have health and safety, you have workers' compensation, and you're trying to manage it more effectively from a loss control, loss prevention. Zero is integrated into that program, and the results are very encouraging utilizing this product. And that's just something that we have and we provide to our clients at no cost or minimal cost. But probably the thing I enjoy the most is when people ask me that same exact question, I can very quickly, pull up our flip book, and you can drill down in a specific area. The other thing I'll say to you, as Dane was talking, is, you look at product lines, but you also look at industry verticals, right? So we have, certain industry verticals in real estate and hospitality. I'll put a plug for that, but private equity, right? And so when you're dealing with industry verticals, there's also a risk appetite tied to those products and services. And typically when a company like ours has a vertical, that means it's an area that we excel at. We have, experienced underwriters, we have people on staff that have, in my case, I've been a chief risk officer, and we really try to, work with our broker partners and work with that client as if we're part of their shop, right, and helping them solve their issues.
Great, that answered it pretty well. Thank you. Another thing I noticed you emphasize a lot is risk appetite. I'm kind of curious what you mean by risk appetite. I'm kind of thinking that it means just how you manage the risk. But could you go further into explaining risk appetite?
Yeah. So, what we mean by that is, do we have a desire to write business based on the exposure? So, our appetite may be very broad. So we do a lot of cat-driven property, but the appetite might vary based on the construction. So we may not want to write frame habitational, but we will write a well-protected building in a coastal area. So the appetite is based on the occupancy, the construction, and our desire to basically entertain putting our capacity up to protect it.
And I'll add to that, when you think about, Gilbert, when I say risk appetite and I talk about from a client's perspective, right?
Yeah.
You know, insurance is, from the chief risk officer's perspective, insurance is just one tool, right, to manage volatility. The first thing you need to do as a risk manager is identify and do a risk assessment. A byproduct of that risk assessment is then overlaying what is your risk appetite. Because only through then can you realize what kind of risk do you want to retain versus what kind of risk you want to transfer, right? And again, insurance is just one vehicle. You know, with Everest, the unique thing that we have is we have a reinsurance. We're in the ILS market. So we have multiple ways that we can trade risk. Both that's, some of it is transparent and some of it's behind the scenes with our own organization. And so I think it's that flexibility of the strength of our balance sheet to be able to do that kind of uniquely positions us. It gives us great flexibility to work with our clients. But if you're coming from the buyer side specifically, that's part of an ERM, right? You need to go through that whole exercise. And at the end of the day, it could be earnings per share. It could be capital at risk. There are a number of metrics that companies will use today to ultimately determine what type of appetite that they have for risk.
Okay, I see.
So that's the important thing to take. And then you overlay that to the insurance company, who their appetite, you know, we may say, as Dane said, you know, we like real estate, but oh, by the way, if you have wood frame construction down in Florida, well, we may take that risk, but on balance, if it was a whole portfolio of just residential or multifamily, it's probably not something that we're going to take on as a risk.
Okay. Great, thank you.
Come on, Ron, no questions?
Dane and Tim, I have a question for you both. On behalf of the group who's on the line, some of whom are graduating this year, some of whom might be graduating a year, 2 years. You both have such robust careers in the industry, and I wonder, not to put you on the spot, but if you might share some words of wisdom and advice for looking forward into a fresh career.
Dane.
Oh, put me on the spot, Tim. All right. Well, unlike most of you who are in college and in the Spencer internship, you knew going in that you wanted to be in insurance, and I kind of fell into insurance along the way. My undergraduate degree is in mechanical engineering, and I happened to work for General Electric, and GE owned an insurance company. They owned employers reinsurance, they owned industrial risk insurers, and at one point HSB. And after 9/11, I was all set to go work for GE Healthcare, and I got tapped on the shoulder and said, "You're going to New York, and you're going to be in the insurance business, industrial risk insurers," which was a monoline property shop. So I kind of fell into this space. But now that I'm here, I would say the best advice I can give is to network. It is to embrace the opportunity. I think this is one of the more interesting areas of industry because we do get to see a lot. There's no typical day, and you get to exposure to all kinds of companies and really learn a lot along there. But also, I think, you know, if this is something you're going to do long term, I think seeking out your industry designation is important. Continuing to stay sharp. You know, once I determined I was going to be in insurance, I got my CPCU in my arm. I thought that was important to continue to invest in my insurance education. But the most important thing is to put yourself out there and ask questions. You know, if you don't understand something, if you don't understand an acronym, if you don't understand why the company does something, is to ask a lot of questions. This is the best way to learn.
You know, I guess just not following on my own career, similar to Dane, I went to the Marine Academy, and insurance was not something I was considering when I got out of school. Now, that being said, I've come into this industry, and I'll say I've never been bored, right? And, you know, I've worked for several Fortune 2000 companies, 200 companies. And I've always told my kids, I've never come home and said, I hate my job, right? And so I'll start with saying to everybody, if you hate your job, go to a different industry. But hopefully that's not the case, right? As you know, in our industry, you see a lot of things, right? And I can tell you as a risk manager, you don't have many boring days, right? There's stuff being thrown at you. And don't be afraid to take on challenges, right? When I first started at CBRE, I was not the chief risk officer. I was head of insurance risk management. And then I had ERM experience, and I took on ERM. Then I took on health and safety, environmental, security, crisis management, and this was all over time. And don't be afraid to say, as Dane said, I don't know the answer, I'll get back to you. But also don't be afraid to keep learning. If you don't know something, don't be afraid to ask people for help. Your broker partners, insurers. You'd be surprised how much resources out there, both online as well as just your relationships that you build. And I got to tell you, Ron's on the phone right now. Over the years, some of my insurer partners were great at giving me assistance in areas that perhaps I didn't have the expertise in. But over time, you got the comfort level to be able to exercise and make good judgment calls. So again, I'd say to anybody on this call, it's a great industry to be in. I'm always happy when I see young people coming in, they know this is what they want to do. And I'll leave you with that. My son, he's in the industry 2 years now. He's an underwriter. When he came to me and said, Dad, you've enjoyed being in this business. What part of the business should I be in? I kind of pointed him towards the underwriting side to start his career. But again, I think never stop learning. More than anything else, never stop learning. Don't be afraid to try something new.
Oh, what does a job like an underwriter entail?
Well, I'll field it. What I would say to you, you think about
Okay.
our the industry, right? You have the insured who has a risk, right? And then you have the broker that's going to match up because he or she understands the risk appetite of the insurance market. You're matching up with an underwriter, an insurance company that wants to accept that risk. So the underwriter's job, based upon, his governing of, the models he uses and pricing models and cost of capital and expenses, he has to determine a proper price against capacity or limit that he's deploying, right? So at the end of the day, the underwriter, his or her job is to make sure, as Dane said earlier, to write profitable business, right? And again, if you're a client who has that long-term relationship with us, there's going to be some years that we are not going to make money on your account. But long-term, it's very important in the health of the industry that we get a return on our capital. So that underwriter's job is to make sure that he or she fully understands the risks they're taking on board and understands the downside as well as the upside risk that account or that client is producing for us. That makes sense?
Yeah, that does. Thank you.
A lot of technology too. I'll tell you, when I first got in this business, a lot of it was more what I call tummy, right? People say, I feel. Well, over the years, that's still there. I mean, it's still a people business, but a lot more technology and analytics. And so for some of you, if you haven't taken an analytics course, a business analytics course, very important. Understand how business and how companies today are using analytics, because I do believe that's going to differentiate companies as we move forward in the insurance profession.
Hey, Tim.
Hey, Ron.
First of all, congrats to you and Dane for doing a great job of telling the story and trying to help enlighten everybody as to some of the keys of customer engagement. What about, you brought up between both of your experiences, and I think for the benefit of the young people on the call, what do you see as the soft skills, aside from all of the technical things and all of the things you need to learn and know as you develop in your career? What would you say about some of the softer skills and some of the things to do with how you engage? Like you said, it's people business. How do you do it? What's your advice to the people on the call about how do they develop those skills, and what does it mean, and what do you think it's done for you in your careers?
Dane?
I think the number one skill that anybody in any line of business can develop to benefit their career long-term is communication. Because we're all trying to inform or convince somebody to do something at all times. And so the ability to communicate both in writing, email, and verbally is so important. Being able to get your message across, being able to get somebody to do something you want them to do, whether it's part of a negotiation, whether it's part of your management skills if you have people working for you, whether it's trying to get your supervisor or somebody in the food chain to do something that you need them to do. It's about being able to communicate with them, to make a good point, and to be concise. That's the other thing, is I see a lot of folks we live in a fast-paced world. You know, we're in the text Twitter world, 140 characters or whatever it happens to be, and there are people with very, very bright heads on their shoulders that can't get out of their own way to make to bring an idea to fruition because they get lost in their own, you know, verbose communication. So I think being able to be concise, being able to make a point and to advocate for it and to communicate clearly and consistently is the most important transferable skill for any young person and anybody in their career.
Yeah, couldn't agree more with what he just said. I mean, and I'll give you an example of my career. One time I had a discussion with someone, they said, you know, Tim, there's basically 3 Tim Bunts. The one is great in person. That person, you know, is great to have a dialogue with. You know, you can see the emotion and, have a lot of vigor for the business. Then there's the guy on the phone, and, you know, equally he's good, but sometimes I can't tell, you know, what he's thinking because he comes across with a lot of passion. And the third was the email Tim Bunt, who could be a real jerk at times, right? And it made me pause and think about just what Dane just disclosed. It's like, you need to hone those skills, right? People are going to form an opinion fairly quickly of you in your career. And, you know, here's another thing I'll say to you. Your name is your honor is your name, right? You're going to be in this business a long time. And people know, you know, who are the people that can rely on, who they can trust to get the deal done. And I've never been afraid over the years of, I'll say, being difficult or hard on my partners, but as fair. And I think that's important. The last thing I'll mention is critical thinking. I think the ability for people to, you know, not quickly, that's not the right word when I think critical thinking, but to assess all the information that's available to you. You know, like I report to Dane. So the thing I have to do for Dane is make sure I'm doing all the homework I can do to pass something up to him so he trusts me, and I build that trust with him. And so he can quickly assess what I've asked of him, and my messages are clear, and he can make a decision, right? The worst thing that can happen is I pass something to him, it's inaccurate, he makes a decision or he passes it on. That breaks down that trust, right? So very important you build those relationships and build trust and mentorship. That's the other thing I'll say to you. You need to have peers, but you also need to have mentors. Mentors that I'll say are not necessarily, you know, someone even necessarily in your own company or someone that, you know, works with you in your same area. You need to have someone that's going to give you an honest assessment. You know, I said before, like the Tim Bunt on email versus the Tim Bunt in person. You need to have that honest dialogue with someone so you can correct it right early on in your career.
One more I would add is personal accountability. So when you say you're going to do something, you do it. You know, personally, that's a pet peeve of mine is, you know, I can't tell you how many times I'm in a meeting and somebody says, oh yeah, I'll get back to you on that. And you never hear a thing. I think it's a really great skill to learn early on that when you say you're going to do something, you do it and you hold yourself personally accountable for that. Tim can attest. I always tell my team that, you know, I expect 100% performance on things that we're in 100% control of. There are always going to be variables that we can't control. But if it's within our control and we don't execute, that's a big mistake. So I think we got to do what we said we were going to do. And if we can control the outcome and it's in our, you know, that's ours, that's on us. And that's something I think, you know, it takes a lot of personal integrity. It takes a lot of personal accountability. And it takes a desire to have that culture of execution. Like I mentioned, is part of our culture is, you know, our culture is let's get things done. Let's do what we said we were going to do. Let's hold ourselves accountable and let's execute.
I have a question.
Okay.
I was wondering if you could elaborate on reinsurance and how Everest decides to take on a risk in that space.
Well, it's going to vary, right? So again, goes to risk appetite. But for us, you know, for those, reinsurance is insurance of another insurance carrier. So our reinsurance colleagues at Everest Re are supporting some of our insurance competitors. So many of our competitors, whether it's Chubb or anybody else, is buying reinsurance potentially from Everest Re. So that creates a very unique situation. And clearly, It requires, because let me back up. There are very, very few pure play insurance companies out there, or pure play reinsurers anymore. Most have some level of both insurance and reinsurance. It also requires us to have certainly a wall between the two, so that information doesn't go back and forth. But reinsurance would evaluate opportunities the same way we do from an insurance standpoint. They would look at the underwriting history of the carrier that is writing the risk. They would look at their appetite for, how much capacity do we want to deploy. They would price it appropriately and see if they can make an agreement on coverage. But they have, terms and conditions and agreements just like we do on the insurance side, except their customer isn't an insured like an IBM or a Coca-Cola or a General Electric. Their customer is a Chubb, an AIG, a Zurich, etc. So it's just providing additional capacity. It's a way for those other insurance companies to lay off some risk to allow them to be more effective in other areas.
The only thing I'd add, Alex, is also when you think about it, just two simple ways to think about it. There's facultative and treaty, right? So treaty, if I'm an insurance company, I have a treaty, I know what's in the box. I can underwrite to a certain level, and I'm laying off risk to that cedent, to that reinsurer. And then facultative, I can decide if I have a risk that I'm uncomfortable with, I can decide that I want to lay off that risk. So that tends to be facultative is more like a one-off play, versus treaty is a whole portfolio of risk, and you have a box around that risk. And then there's all types of things like, whether you have a stop loss or, what are you trying to achieve by the utilization of reinsurance. But it's all driven by, returns on capital, what your position is as an organization. And as Dane said, reinsurance companies buy reinsurance as well, right? That's retrocessional reinsurance. So it's I think it's very exciting, the reinsurance world.
Thank you for answering that.
All right. Dane and Tim, I want to thank you both so much for spending time with us today. This was such a great presentation and such great insight to share. So thank you once again from all of us at Spencer for taking the time to be here and share your expertise. And just in the interest of everyone's time, we're a couple minutes over, so I just have a brief announcement for the folks that are on the call. Our next week's webinar, next Thursday, will be joined by John O'Brien, who's Executive Vice President and Head of Environmental at Ascot, and he will actually be touching on what we just spoke about, which is what I wish I knew when I graduated and started my career. So we hope you'll join us for that, and thank you both for that introduction to next week's topic, which is great. And with that, I just really want to express again our thank yous from all of us at Spencer for joining us. Tim and Dane, thank you.
Our pleasure. Thank you.
Thank you. I'm Myra.
Good luck in college.
Thanks, everybody.
Bye-bye.
All right, thanks, guys.
Done.
Thank you.